Stocks on Wall Street falling Thursday afternoon on this last trading day of April on that grim jobless claims report. Let's get the prospects for May, and for that we turn to Greg Hahn. He's Chief Investment Officer at Winthrop Capital Management, and he joins us from Indianapolis, Indiana. Welcome, Greg. Now, 3.8 million more Americans filed jobless claims last week. It's the latest in a string of grim economic data, whether it's retail sales, manufacturing, home sales, consumer confidence, what have you. So the economic recovery, will it have a U, V, or will it be W-shaped as you see it?
That's a great question. From the economy standpoint, right now, it is not a V. At best, this is going to be a U, and we don't see the W. This is going to be a slow recovery. It's going to be slow, and until we get adequate testing, and frankly, until we can control the spread of the virus, which would imply a vaccine, I don't think we're going to really see traction, especially in the hospitality and the travel industry.
If it's a slow U shape, as you describe it, are equity investors overly optimistic right now? I mean, the way stocks have come back since that March 23rd low, bond investors are signaling caution with the 10-year Treasury trading at around 0.6%.
For us to make sense of what's going on, we need to break it into three separate, distinct areas: the economy, the financial system, and the capital markets. So by separating the economy and the capital markets, the movement in stocks, which is part of the capital markets, doesn't surprise us. We would expect that once there's aggressive monetary stimulus and aggressive fiscal stimulus, that financial assets are going to do well, and we've seen that. Now we have to start parsing what's actually going on, because when you look at tech is driving this. The top 5 stocks now represent 20% of the S&P 500 from a market value standpoint. It's dominated by large cap tech. Now you look at the other end of the spectrum, and there's some wreckage, some carnage along the road, and it's in that travel, hospitality, retail, the mall area. There's some real beaten down stocks.
Greg, for this rally to continue, do we need new leadership in the market aside from techs?
So tech, I think what we've proven right now is that tech can sustain this, because a lot of this is cloud-based and we're going to 5G. That hasn't changed. We saw it with Qualcomm's earnings. Qualcomm came through, and it was pretty solid from a revenue standpoint. But that's only part of the economy. So now this becomes a stock picker's market. So to answer your question, Fred, yeah, I think we are going to see a shift in leadership, and we are going to see it looks terrible right now, but we are going to get through this. And it's just like the financial crisis. You could buy some of these manufacturing companies were very, very cheap. We're going to have an opportunity here to pick up some really solid names once they survive this storm that we're in.
Well, Greg, you mentioned manufacturing. Manufacturing indicating value stocks. Will value stocks take the lead?
Oh my gosh, yeah. I think that when you look at this is really this is a 2-stage process. The first stage right now is survival. Companies are in survival mode. You got Boeing in the market now. They came to market, Fred, with a $10 billion deal. They upped it to $25 billion. This is a company that's looking really first to survive. Take it out 2, 3, 4 months, and now we're into an operations mode, and now we've got a whole different set of circumstances, because we're past the survival, and now we need to compete, and we need to right-size the financial statements. It's going to be a different kind of an operation. We're going to see that with Ford, GM. You go right down the list. It's all the sectors are going to, once we get past the survival mode, it's going to be a competitive market again.
And Greg, so what's the outlook for May for stocks? Positive one?
Oh, the stock market, yeah, absolutely, yeah. And we're also on the credit side. The bond market, the March there was tremendous spread widening, both in investment grade and high yield. And it's been a tale of two markets. We've seen credit spreads come in, but we've seen some of the, you look at the airline stocks and some of the auto related stocks, manufacturing, those spreads have leaked out. Those are wider.
Well, thanks for joining us with your views. Our thanks to Greg Hahn.
Thank you.
Of Winthrop Capital Management, joining us from Indianapolis. I'm Fred Katayama, and this is Reuters.